Australian pension funds poised for $1 overseas spending spree. Australian pension funds, also known as super funds, are reportedly gearing up for a staggering $1 trillion spending spree overseas. Yes, you heard that right. $1 trillion Australian dollars. It's not just big news for investors. This move could reshape global markets, shift Australia's financial strategy, and spark real debates about where your retirement money should be going. Australia's super funds are sitting on a mountain of cash, nearly $4 trillion, and growing fast. But now, a massive shift is underway. These funds are preparing to send up to $1 trillion overseas, chasing higher returns and long-term growth. That means your retirement savings could soon be financing projects across the globe, from European toll roads to American solar farms. But is this a bold investment strategy? Or a risky move that leaves Australia behind? Today, we're diving deep into what's happening, why it matters, and what it means for your financial future. Right now, Australian super funds hold around $3.70 trillion in assets under management. That number is growing fast, driven by compulsory super contributions, rising asset values, and a growing workforce. The sheer scale of this money pool makes Australia one of the biggest pension markets in the world. But here's the catch: a large portion of that capital is still invested domestically in local equities, bonds, real estate, and infrastructure. And while that supported economic growth at home, fund managers are starting to say the local market is too small to absorb the massive inflows heading their way over the next decade. In simple terms, there's too much money and not enough local investment opportunities with high returns. That's why these funds are looking abroad, to Europe, to the US, to Asia, and beyond. The goal is to diversify, chase better yields, and secure long-term returns for millions of Australians entering retirement in the coming years. So where exactly is this money going? We're talking about large-scale investments in infrastructure, airports, ports, renewable energy, data centers, toll roads, you name it. Super funds are hunting for stable, long-term assets that can deliver reliable income. And overseas markets, especially those with massive infrastructure spending plans, offer exactly that. Some funds are also turning to private equity, venture capital, global real estate, and even green energy startups, all in search of that elusive mix of growth and stability. But while the numbers are impressive and the strategy might make sense financially, there are also growing concerns back home. Critics are asking, shouldn't Australian retirement savings be supporting Australian projects? Shouldn't this capital be used to build more affordable housing, better roads, cleaner energy systems right here at home? In other words, if we're sitting on trillions, why are we still facing infrastructure bottlenecks and housing crises? It's a fair question. The answer is complicated. Fund managers have a legal obligation to act in the best financial interests of their members. That means maximizing returns, not necessarily nation building. If offshore assets offer better performance, they're likely to win even if there's unmet need locally. That said, there's also a growing push to balance this, to find a both-and solution rather than an either-or. The idea is to keep investing in Australian development, while also tapping into global opportunities that benefit members over the long haul. Let's also talk about what this means for everyday Australians. Most people don't think about where their super is invested, and many don't realize how powerful that pool of capital actually is. When you contribute to your super fund, you're becoming a stakeholder in a massive, global investment engine. Your money could be helping build a toll road in Spain, finance a solar farm in Texas, or fund a tech startup in Singapore. But it could also be shaping the future of your own retirement. If these offshore investments pay off, that means bigger super balances, more income in retirement, and potentially earlier financial freedom. Of course, there are risks too. Global markets come with global volatility. Currency swings, geopolitical instability, and economic downturns in other countries can all impact returns. That's why these funds need to be smart, strategic, and diversified, not just chasing returns, but managing risk on a massive scale. Now, here's the big picture takeaway. Australia is no longer just a small player in the global financial system. With its superannuation sector poised to reach $6 to $7 trillion in the next couple of decades, the country is becoming a major capital exporter. And that gives Australia influence, the power to shape industries, support transitions to green energy, fund tech innovation, and participate in building the infrastructure of the future. $1 trillion, it's more than just an investment trend. It's a financial force with the power to shape global industries, local economies, and your own retirement. The choices being made right now by Australia's super funds could define the next decade, not just for investors, but for all of us. So keep an eye on your super, ask questions, and stay informed. If you found this video helpful, don't forget to like, subscribe, and tap the bell so you don't miss the next big shift in the global economy. Thanks for watching, and I'll see you in the next one.